In a new method here, we are going to be streaming here, setting up swing trades. We're going to be talking about using some platform for doing crypto swing trades. I'll wait here to make sure everything is set up properly before I jump in, before I get started. Plus, I want to make sure that the person that actually asked about this is maybe on. So what we're going to be doing here, I'm just going to make sure that everything's good. I'm testing out a new method, or not a method of, I'm just seeing if I can, I'm on my super machine, I guess you could say. Well, it's not super anymore. I need to upgrade to the super machine. I need to upgrade this super machine. All right, let's see where we're at. There's minor issues with, okay, copy that. Copy that. I'll share it on the YouTubes. All right, we'll jump in here in a second. I just want to make sure everybody, there's kind of, obviously people can watch the recording too. Here we go. Let me just share this out in Discord. Sorry. How to develop a swing trading strategy using some automation in crypto. I'll make sure this voice is coming in. We'll be starting here in a second. Can't hear anything. Make sure this voice is coming in. We'll be starting here in a second. All right, I don't hear anything. Let's see. Can't hear anything. Audio wise, I think we're up on audio wise. All right. Anybody that's in chat, can you just share whether or not you can hear me? That would be great. I think we're up on audio wise. And I need to pick where. Why? Anybody every single time I start up Twitter, why does it change the view? So annoying. Does it change the view? So annoying. All right. All right, you can hear me? Great. All right, sweet. So in this video, what we're going to be doing is, let me share on Discord and then share on Telegram. Sorry. All right, you can hear me? Great. All right, wait, sweet. Why is that? So in this video, what we're going to be doing is, let me share on Discord and then share on Telegram. Sorry. All right. So in this video, what we'll be doing is we'll be talking about developing a swing trading strategy. This is something that I know I have somewhat in my training, but I want to actually do a much better job at providing guidance on creating swing trades. So that's one reason why I thought, someone in Discord asked about creating an automated swing trading strategy that I have a friend that did. There's a couple different, I have a couple different people in real life that they're not able to kind of day trade. So what they do is that they've just implemented the Rexdog system as a swing trade. So that's what we'll be discussing here. So let me just get a little organized here, and then what we're going to be focusing on is the crypto market. So, and what we're going to, there's another tool, and I'll link to the tool here down below that I think works really well for this type of thing. The tool is called 3Com. It's linked here. So this is the tool, and this type of thing. Here we go. That's the tool. Tool for sending signals. We'll be talking about that here, but just let me get organized. Okay, so the question is, or we'll be talking about that here. Let me see if I can get organized. Open up a notepad. Question is, there is an echo. I wonder if the echo. Let me see if I can. Yeah. Open up a notepad. Question is, I wonder if the echo is because I'm streaming in two different locations. I can't hear. Oh, you know what? The echo is because I think it's my. Sorry. I think I can't hear. Oh, you know what? I think it's the desktop audio. So is there still an echo now? Sorry about that. Just, I do apologize. I think my desktop audio was creating an echo. I can't hear it, so that's weird. But, yeah. Damn it. Okay. I might have to start this stream over. That fixed it? Okay. All right. So we'll go with that. I can't hear myself, but that's fine. I don't need to hear myself. Okay, so we're going to start on, let me share this. So first thing we're going to cover is swing trades. So we're going to talk about swing trades. And we're going to talk about swing trades as far as set and forget. Meaning that what we're going to do is we're going to create a swing trade strategy that is going to send a signal. So we're going to use TradingView to send a signal to ourselves or a third-party app. The link that I put in there is a third-party app. I'm not going to get into that third-party app just because I'd have to log in, and I just don't know if there's things there I don't want to reveal. So you'll have to figure out that aspect yourself, but we'll dive into how I've done it before and how it would work. But generally what you do is you use TradingView, so TV. You use TradingView to send a alert to text messages, and then with that alert, that can fire in 3Com. So 3Com is the tool that can then enter trades for you. The other option here is what you do is you just set up alerts in TradingView, and then you pull up the chart and execute entries. Now you should have a plan ahead of time, obviously. And so, but if you want something completely automated, you can use a system like 3Com, for instance, to do that. So that's something to keep in mind. It works pretty well. Basically what you do, and I think I have some alerts that actually set that up. So, and I don't think I'll be revealing anything here if I share the alerts. Where are my alerts at? There, notifications. No, that's not. I haven't used this for a while, so please forgive me for forgetting where the alerts are. There we are. So we have a couple alerts here. I have one where it's basically triggering on the actual, yeah, I removed it. There we go. So so what you do is you set up, and I know I'm going kind of backwards, I'm just sharing that. You can set up the alerts to go to an SMS, and that SMS will go to a third-party tool like 3Com, and then that will enter your trade. So that's functionally how you're doing it. You're basically setting up an alert, and then what you're doing is you're sending an email to SMS, and then that app will, I think you can notify an app too now. So I wonder if that works. Okay, so this is phone. Okay, so it's either notify an app or send to SMS where you would do this, and then what it would do is it would send the alert to a tool like 3Com, and then it would enter your trades. So I'm not going to get into the functionality of how to do that. You have to figure that out. I'm going to get in more of let's set up the trade. Let's talk about how you create the alerts, how you create a swing trade strategy using, we're going to use the RexDog system. So we're going to use the RexDog system, and we'll talk about how to do that effectively in a low management type of setup, meaning that the system should set up a trade for you. So let's talk about how we're going to do this. So the system should set up a trade for you. Set your stop losses, and possibly set your targets. So that's a minimal entry, meaning you're in a trade, you don't have to worry about it, it's almost set and forget. until you get about a month into a strategy like this, you're not gonna. It's gonna take you about a month, maybe 2 or 3 weeks, to refine a system like this. So I'm just sharing just realistic. This isn't something you're gonna turn on right away, and you're just gonna start profiting, and it's just gonna start working. It's gonna take you anywhere from 2 to 4 weeks to get to a swing trade system that you trust. Even then, you're still going to want to manage it. You're still going to want to watch it. You're just not going to want to sit and forget because, you're communicating with a couple different technologies and you just don't, you're going to want to at least check it if you're in a trade. So that's something to keep in mind. This isn't something that the technology is not to the point where you can set it and forget it, but it's pretty hands off. It shouldn't take you much more than a couple minutes a day. All right, so let's talk about, let's start with where you should start. So the first thing that I would suggest you do is you pick just one ticker. Don't do Bitcoin. Well, you can do Bitcoin, but I would suggest we're talking about setting up a swing strategy within the alt market. So what I would suggest is you basically you pick one ticker that you like that has good liquidity that you can trade. So I would suggest something along the lines of BNB, for instance, or something like not Waves, but Ape, for instance, that has good liquidity. Even ZIL has a decent liquidity. Not that great, but figure out what we're going to use here is we're going to use BNB. So we're going to use BNB. So that's what we're going to use in this. Now what you're looking at is you're looking at my crypto all chart. And the way that you're going to want to actually set up this is first, let's talk about trade management. So I'll remove all this, put it in another one of these docs, and then we'll talk about trade management. So trade management. So trade management starts from the first point that you decide to do this. Let's talk about entries. Okay. So entries. There's only two ways to enter, either one position or scale in. Scale in is a little bit harder because you'll have to set like a matrix bot or something. So you don't do that until maybe 2 to 3 weeks. But that's where you're going to get to. Right now, you're just going to focus on one position, meaning that you're going to get a signal, and you're going to then enter at that signal, and then so we're going to start with the one position, and I'm going to do a check-in from time to time here. Is this does this making sense? Is everybody tracking? Or I know there's only a few people watching, anyways, but just make sure. And then with that one position, we're going to have a stop loss, and we'll have a take profit. So this is your first phase of doing this. So let's talk about how you want to do this. There's two ways you can do this. Number one, there is alerts around indicators. And then number two, there is the good old-fashioned schedule time. What I mean by that is swing trading, you have probably 5 to 10 minutes a day. Somewhere. You can find 5 to 10 minutes a day. And within that 5 to 10 minutes a day, with the RexDog system, you should be able to identify and what I should say first here is we're gonna these trades. I apologize for not starting this. We're gonna talk about futures trading, meaning that we can go short and long. But let's say that you can only go long only. So we're gonna do spot or margin. We'll talk about that as well. But it's the same. It doesn't matter because look, if Anybody trading the Rexdog system, you should be able to look at the chart and tell me where this chart here, I know it's a little busy, but you should be able to look at this chart and tell me where's the next reaction zone. You should tell me where's the next key level that I want to trade around. You should see the next upside and downside level within 10 to 20 seconds, if not quicker. So those are, if you're adopting the Rexdog system, that's the philosophy of the system. So when I say there's two ways to do this, of course you'd like alerts to just fire on indicators, and then you enter a trade and it's set and forget and everything else. What I'm saying is that you want to actually start probably from the scheduled time, because because the way things work in real time never match the way that it works in looking at historical charts. So I would suggest you start with a scheduled time. And what I mean by that is that you set 2 times a day. So 2 times a day. And if you're just starting with one ticker, it should be really easy. And then you put alerts. So 2 times a day, you put alerts that will fire to 3 COM. That's all you do. How do you do that? It's pretty simple. You just, let's say that here we're looking at the 4-hour, and let's say that we're gonna do a momentum check trade right here. So that is a momentum check. That would be a trade right at 304 spot 8. Don't I sound like a trader? 304 spot 8. All you do is just create an alert, and then here you can set all your notifications. You can set everything you need to do. If you're using an application that uses a web URL, for instance, you can set that, okay? But here's the thing, and I want you to listen to me, whoever's listening. Trading is about discipline, okay? And I'm going to use me personally because obviously I know what I'm going through. I've had two bad trading days because I've allowed discipline to falter in my own personal trading. Even though I still have, I mean, look, I've more than made up for it on those 2 losing days. It's still not respecting trading. Trading is about pulling capital from the market. So your number one role is managing yourself. So the way to look at it, if this helps, I don't know if this helps you, anybody that's listening. You started a company, and your company, you've started a prop firm. Let's just say you started a trading company, and you've earmarked a certain amount of capital to go into that company to make a return, and you've hired yourself as a trader. So if this helps you think about this or look at it from this perspective. So what you should be constantly doing is evaluating yourself and seeing whether or not you would continue to hire yourself as a trader or if you'd fire yourself. Now, so the first thing to do is you're managing yourself as a trader. You have a trading company that you've created and you're managing yourself as a trader. So if every day you're not showing up to work or every day you're not being disciplined, would you fire that person if you were hiring someone? And I could almost guarantee most people would be probably firing themselves as a trader. I would have fired myself 3 weeks ago. I would have took myself out and probably went behind the building and maybe, started my own fight club. I know we don't talk about Fight Club. So I know I broke the rule of Fight Club. But I would start my own fight club to readjust myself. So the first thing, when you say, oh, well, I want just an automated strategy, I just want the alerts to fire. Look, you need to prove to the company that you started that this system works. And the way to prove it is what you do is you create a disciplined approach where twice a day for 5 to 10 minutes, if that, you go in there and you select your trade entry areas. So to me, I know most people want to just fire up the chart, go and say, okay, right click on the RDA here, for instance. So I can go to the RDA, right? And I can right click on the RDA and I can say, create an alert on the RDA right there at the indicator strategy. And I can create an alert. I can add alert. I know that's what you want. But what I would suggest is that you take a step back and you create the manual process of you showing up twice a day and replicating what this system would do. Because then you're going to learn what that's going to teach you, and do that for 2 weeks. What that's going to teach you, or what that's going to reveal to you, I should say, is that I've done it the other way. And what happens is that the bot fires, or the things fire, or things start executing, and you don't quite know. But if you are in there setting it up yourself and actually managing it as a human factor, that's the first element. And then you can get to automation once you've proven that, okay, this works. All right. So what I would suggest is just some feedback, just anybody that the few people that are watching, are you tracking? Does this make sense? So what I would suggest is you reserve 2 times a day. You want to be maybe about an hour from the open, at least. So at least an hour from the day open. I'd say, because what you want is you want the opening range to develop. So you want it, I would say 90 minutes from the open. And then you want, ideally what you would have is you would do maybe 12 hours into the trading day. And the reason for that is because what you'll find is that the market often moves. Obviously, the market uses the opening range, the first 60 minutes, for levels and directional bias. The other thing that you're going to find is that around that 12-hour mark, maybe 8 to 12 hours, the market makes a pivot move. So you want to be available for those pivot moves. You want to be looking at the chart for those pivot moves. So just look at your time zone, or look at your time, understand the day, where it ends, and then plan accordingly. That might mean that you have to get up, a little bit earlier. No, I'm talking about the opening range for the day. So what I mean by is the opening range for the day, for that. So for instance, if we go here, do I have my new indicator? I'm releasing a new indicator. Well, we'll see. We'll see if TradingView is going to allow this indicator to pass. Let's see where we're at on this indicator. Let's go up to 85. Let's see if they allow this indicator to pass. I doubt the one mod that doesn't like me is going to allow this indicator to go through. I know it's a busy chart. I apologize. Let's do this. So please, new layout. Booyakasha. That's my new, or not my new, it's just I'm talking about the opening. Okay, yes. Sprolic, the opening range, well, there's 2 opening ranges that I want you to consider because they matter. The opening range of the New York Open, the New York cash market, when the market is open. And then there's the open, because that decides the day when the cash market is open. But the day opening range of that actual ticker, that asset. I know it's 2 things you got to, but you'll find that the directional bias of that day often follows how well those levels are respected. So I know it's 2 things, but really functionally how it's probably working is that you're gonna 90 days into the day open, you're gonna check the chart, and then if the cash market is open, you're probably gonna check around mid-market. That's probably where you want to be. A little bit maybe in the lunch session is what I would suggest. So let's go and let's add some indicators here. I just want to add, let's just start from, what is this called? I think it's already, sorry, I apologize. So I know that I wanted to be completely set up, but I want to use my new indicator. Where is it at? Why is it not showing the weekly or the daily open? Oh, that's because I'm looking at the 4-day. I need to be smarter than the chart. Duh. All right. So And I'm working on an initial balance indicator, just so everybody knows. So I am working on an initial balance indicator. The weekly level would be that. No, I agree. So you know what you're looking at, just everybody that's on here. This red and orange line is the weekly open. This teal is a previous day VWAP close. And then this red and green line is the daily open for that ticker. So obviously BNB opened here. So if you look at the opening range of this ticker here, and you take this opening range and you just look and say, okay, here's the opening range of the first hour of this trading here. And then we go to the 5-minute chart, and then we do an auto because obviously TradingView wants to be annoying. Look what we see. Okay, so this is a prime example. We see that the opening, you want to let the opening range develop first. If you do see a trade, then great, but you typically want to let the opening range develop and give it a half hour. Because what do we see here? So the market opened at 1900, and then here is right around 2130. I didn't plan this. It just happened to be perfect from what I'm saying because I've been trading for years. What did I say? 90 minutes. Well, the market opened here at 1900, and then right around this time, we have a pivot in the market. I mean, we do have the opening range was exceeded, and then it sold off from there. So this is why you want to look around the 90-minute mark, because that's oftentimes when you see a pivot, especially on these things that open, especially in the crypto market. Now, you're going to use the opening range, obviously, to understand the directional bias. Now, at this point in time, you would have thought, and what I would ask for anybody watching on TradingView, is there anybody on TradingView? Because I can shut that down if no one's on. Because I'm streaming to TradingView in a separate, different way. But what I would ask in YouTube, for those that are watching on YouTube, is that just share. Are you tracking? Does it make sense? That's all. Just a quick check-in. So at this point in time, you're checking the market. Now, I would almost fade this move here, but we're not going to talk about that. You're going to use the opening range, and where do you get the signal that probably the day was probably going to sell off? We don't even have the Rexdog system on here. If I put the Rexdog system on here, we would obviously have more edge. Well, you should be saying right here where it lost the opening range. And then what did it do? It tested a previous day VWAP. It didn't even test the bottom of that, and then it sold off. All right. So there's two ways that you would have traded this. And here's the challenge with doing some swing trades. Because your swing trade would have been your best swing trade entry. There's two swing trade entries. If we're just talking about using the opening range, okay? And just share with me if I'm going too fast or I'm going down a path that doesn't make sense based on what you're understanding. Let's go back in the chart. And we're here. So we're back here. Now I'm on the 5-minute. I'm just on the 5-minute because once again, you would be looking at the hour. We're talking about swing trades. But where are we at in our planning right now? We're looking at the chart. We're spending 5 to 20 minutes and we're going to plan our entries. Now, right here, if you've been qualified to fade trade, I'd allow you to fade the market here. If you haven't, what are you planning? What type of trade are you planning? You're planning a trade, and if we go to, let me open up another chart here. So I'm going to do this. I'm going to name this, rename swing trades. And we're going to add the RexDog system because we want it. RexDog Foundation, Trade System Foundation, private indicator. If you want to trade the best system on the planet, I would highly suggest that you join the training. So I don't think there's anybody on TradingView. Maybe I'm not actually streaming there. Who knows? So we've got the RexDog trade system on there. And now we're going to open up a second chart, or a side chart, sorry. We're going to open up a second window, a side window. We'll move this out of the way. And then we're going to do, on the left window, we'll do the 5-minute, and then we'll do the 60-minute here. I would probably suggest that on the 4-chart setup, you're going to do a 4-hour and 1 hour, but I just want to lead you into how functionally you would start this before you kind of automate this. So at this point in time on the chart, yeah, this is the problem. I can't do replay on this and show the chart. Okay. Yeah, that's annoying. That's annoying. Okay. At this point in time, what trade is available just using the opening range? What is the best trade that exists here on the 5-minute chart? And you should be saying, based on the system, is that in this zone, this is the best trade. Given how the chart looks right now, that's the best trade. As far as a long trade, the 5-minute charts, momentum long, but the challenge is, and this is where like you look at the 1-hour chart, the 1-hour chart is still momentum long. So this would be the trade on the table right here with the RexDog system. And that would be a long trade. Entry right around here. And then, you know, and we're going to talk about stop losses. So I just want to talk about entries first. That is based on where the chart's here. And I'm just going to look at this chart here. Sorry. Based on this chart, that's your best entry. If we go back and we get out of replay mode, because I can't do both replays on 60-minute and the 5-minute for some odd reason. Well, let's look at the 60-minute chart at that point in time. So at that point in time, your best trade is right down here. That's your best trade based on the system. Based on the system. Now, are we in kind of a messy area here? Yeah, we're kind of in a messy area because, well, we're in a changeover zone. So, you know, this is where we're in a changeover zone on the 60-minute. What you would be expecting on this trade is you would be expecting that it's going to hit the momentum indicator, it's going to hit the bias indicator, and it's going to hold up. That's not what happened. It just sold right through it. So this would have been a bad trade, or you just most likely you would have not. You would have been stopped out here because you're not going to be probably entering on this. This isn't to enter to scale in on this is an advanced entry, and I'll probably have to do another video on this. But we're just talking about single entries, meaning that what you're going to do, we're going to go back in time. And are you tracking? Am I being clear? I just want to make sure I'm being clear. So just share in the chat. Well, here's the thing. If you pulled up the chart at this point in time, you would be executing a long trade right in this zone, maybe right below the daily open, and then give it enough room to check the RDA, to check the slow momentum. Now you have another daily open, you have a couple levels here, you have a couple interesting things here. So that's the trade on the table when you're at the chart at this point in time. And now obviously you could easily just put that into the system, you can do anything, but what I want you to do is I want you to test your software, test your process. Now, how do you do that test? Well, now if you can trade obviously in one of the platforms, then you could just trade right on TradingView, obviously. But what I would suggest you do, because you're going to be sending alerts to 3Com or a third-party system, is you do what you would exactly do. You just add an alert. Where is it at? I don't want to add. Where's the alert? How come it's not adding an alert? Okay. Am I dumb? Oh, because I'm in replay mode. That's why. I can't add an alert in replay mode. So that's why. Sometimes I feel really dumb when I use TradingView. Now you can add an alert. Okay. So just imagine that we're here, obviously. And then you would add an alert. And then that alert will fire to your technology here. And then that alert will enter a trade. And then your technology using 3Com or whatever tool you're using should automatically set up your stop losses. Should automatically set up your entry and then your profit targets. So that's how I suggest you start. And do that for 1 or 2 weeks to test your technology, to test your process. Now, what I would suggest that you probably trade on is you decide on whether or not you're going to use the 4-hour as your base, meaning that you're controlling time frame, or are you going to use the 6-hour or the 8-hour? Okay, there's no right answer here. Obviously, the higher time frames, the more that you need to give the trade room to actually work out. If your base, if the base, we're talking about creating a 4-chart layout minus our tick charts. You need to decide which one do you like better. You can see here, the RexDog system works. It doesn't matter what time frame you use. I mean, the rules in the system works the same. Choose 6-hour, 4-hour. Obviously, 4-hour is a popular time frame, so we're going to use that for here. All right. So, why I wanted to start kind of like initially, just covering the opening range, because you'll see once the opening range was lost, that opening range, the way I look at it, the way I like to look at it is that the market got permission to sell off. Once that opening range here in this day was lost, the market then sold off. And then, that's why oftentimes maybe what you'll want to do is you'll want to look at the chart from a perspective of, okay, I don't want to get there yet. So let me just stay focused here. Okay. So, all right. Sorry. All right. So decide on your 2 times a day, and then you're going to decide on a controlling chart, which would be like your main chart, which would be the 4-chart setup, and then or the 4-hour. So we're going to use the 4-hour for this, and then what I would suggest is then you go to the 1-hour for entry, and all that's doing. Just so you know. So if we look at this level here, we look at this 4-hour level here, and we identify this range here. Obviously, we have the low for the day, so that should give that, or the low for the week. You should give that special consideration. Just this. So when we look at the RexDog system from a level perspective, where are our trades? Our high probability trades on the 4-hour are here and here. I mean, it's number one, that's support and resistance 101. But number two, we've got the weekly open up here. We've got the week low, and we've got key levels. So just from a 4-hour perspective, those are our 2 high probability trades. Now, from this point in time, there's 2 ways that you could, if we were looking at the chart right here, there's 2 trades that you would probably put in the system to execute the trades. What you would do is you would do a short from up here on a weekly test, and then you would obviously do a long from down here. Real simple. Now, what does the RexDog system tell you? Well, the RexDog system tells you that there's two things. We're in a momentum short environment, and not quite a bias short, but a momentum short environment. And we haven't seen, except for this little area here, there hasn't been proof that the momentum's going to shift over. But what do we know about the weekly open? We know the weekly open acts as a magnet. So there's two ways that you would execute this trade as you were sitting here. Number one, you would put an entry down here within a stop loss. You know, we'll talk about stop losses. And then you're going to target the weekly open. That is the less aggressive trade. Obviously, that's the less aggressive trade. But is that not the trade that the chart tells you from a rec stock perspective the momentum and bias is telling you? Now, what would negate that whole fact? It's very obvious. It's a close on the 4 hour above this level right here. That's above all of our indicators, everything else. So that if it closes above here, we're into this alpha candle. The other thing is that what's most likely to happen? Well, it's switched momentum, it's switched bias, and then we're probably gonna the other thing that you always want to have in the back of your mind is, where are we at in the week? Where are we at in the day? Where are we at in you with swing trades? What you want to be projecting out is you want to be projecting out what's the probability of the next target on the downside and the upside hitting first, because it's gonna go, the market, I guarantee, is gonna either go here first or here first. It's gonna go one of these places. It's guaranteed. We know that. We've defined that. The chart tells us that. Now, we get a close above this level, then based on what we trade, the rec stock system, we would expect a higher probability that it's going to, at least by tomorrow, because tomorrow is the weekly close, it's going to try to do a test for the actual weekly open. And then what's the best trade on the table there? Is a short. Short right around here. That's your best trade on the table. So those are your best trades on the table. Now, this is where, so you've identified your two, now I know it took me 10 minutes to kind of go through this whole process, but would you agree, or would anybody trading the system should be able to say, yeah, I should be able to do that within 10 seconds? Because you look at the indicators, you look at the key levels, and you say, okay, here's the highest probability trades. I see the alpha candle. You know, we've got another area here, so we expect another failure right around here. We expect another failure. But obviously, if it takes out this level and it takes out this level, it's very clear that it's probably going for the weekly open. The challenge is that at this point in time, where we sit on the middle, it's Saturday, it's 1500 my time. You know, we've got various. Here's the way to look at this. We've got various. On the 60-minute chart here, I'm looking at the right chart. We've got the RDA, we've got the VWAP, we got the fast momentum indicator. The positive side on the long side is that it's recaptured the actual momentum. So what trade exists to me is a fade trade. The fade trade looks like the stronger trade based on the structure, because doesn't this look like a flag pattern? So for those that are, doesn't this look like a flag pattern? A developing flag pattern on the 4 hour. For those that are, wondering, I mean, you should know what a flag pattern is, but in the training, I share how to trade the flag pattern. So that looks like a developing flag pattern possibly. Now, the challenge is that our entry is right around where we would expect momentum checks. So from a swing trade perspective, a single entry swing trade perspective, there's two ways to do this. You either wait, you either put in an entry at a pullback, put an alert at a pullback with a stop loss. We'll talk about I'll get into stop losses specifically, kind of how you just do that. And then your target is the weekly open. I mean, this is a runner. You want this to be a runner. I'm not going to get into the better way to do this. What you want to eventually get to. So you're not going to start here, but what you want to eventually get to is that you're creating a scale-in plan within a final stop loss. A protective stop is a way to do it. Because what do we expect here? We expect all along here, we know there's going to be a reaction here. There's going to be a reaction here. We just know this. It's the way the system works. There's going to be a reaction here. If it does get up here, I mean, but then we're getting close to the daily open. Right now, it's trying to recapture the daily open. And it has 53 minutes. Oh, no, it doesn't have 53 minutes. Sorry. Let's go and see how much it has on the daily open. It has 3 hours and 53 minutes to potentially recapture the daily open. From a daily perspective, this is the other thing that you'd want to factor in, obviously. From a daily perspective, it's looked like it's maybe going to lose momentum. So from a daily perspective, where's our next best trade opportunity is right here, between this range here and RDA check. That'd be your next best. That'd be your next. Am I bouncing around too much? Just probably mainly talking to you, but and anybody else. But from a daily perspective, that's your best trade, with the expectation that obviously this key level is going to hold up and the RDA is going to hold up. You already got these lows, so that's the best trade that exists. And until we get a close above the fast momentum indicator on the daily, it might be in a switchover of a momentum short. So what I want to be very clear on is, if we go back to the 1 hour, we're using 4 hour as control, we're pulling up the chart, and then we're putting alerts for trades. We have 2 trades in the system right now. Now it's just being patient. Now there's another way. If you want to be more aggressive, then obviously what you can do is then you could we've got the mix 200 right here. We've got a couple key levels here. You could enter the trade right here. Or not right here. You could enter the trade a little aggressively with, once again, it's a fade trade, and where are your entries at? Your entries are really at, I mean, they're near where we expect. 2 things are going to happen here. It's either going to, because it's the weekend and maybe there's low liquidity or less liquidity than what's typical, it's just going to rip through all these and just going to hold these levels, or it's going to do what it looks like it's trying to do, which is sell off, especially if you look at the daily. If you look at the daily, I mean, it's holding both levels. So you're in the middle of a range in a way. So really you don't have edge. So that's why you need to really plan. The thing with swing trades too is 50% of your trades are not going to get picked up if you're not aggressively trading. If you're aggressively trading, then obviously more of your trades are going to get picked up. But if you look at it from a 1 hour perspective, where's our first entry point? Our first entry point on the 1 hour is right here. That's a short, is right here. Actually, that's a short. Is right here. That's your first entry point on the 1 hour. If you want to be aggressively trading this. Now, if you correlate that to what it looks like on the 4 hour. So where are we at? How come it's not showing? Why is it not showing on the 4 hour? It's right here. Okay. It correlates really closely to a 4 hour key level as well. Minor level, not even key. It's a minor level, weak level. Correlates to a, why is it not sharing the drawings? Am I on the same asset? Yeah, I just don't know why it's not sharing the drawings. Weird. Oh, that's why. Time, symbol, there we go. There we go. Sync and layout. All right. Okay. So this 1 hour entry correlates to a weak, although minor stair step level on the 4 hour. So that would be an aggressive entry right here. That would be your aggressive entry. And then that's a fade trade. And then it's literally set and forget. The other option to do it is that you enter now, and then you put your stop loss in a protective mode down here. Because how much room do you have if this trade actually works out? You have, it's, 1% for 4%, 5% roughly, 4.5%. So if you see that trade right now, this is where you have to obviously if you're swing or if I would prefer a pullback to an alert. But look, if it's going to move the way that if it's going to do a weekly open test here overnight because of the low liquidity, it's going to hold these levels on the low side. So at the end of the day, if you enter the trade and then it kind of bounces between this, but eventually within the next, 8 to 12 hours, it does that, then, does it really matter? Because you're not sitting there watching the chart. The other thing I'd factor in is that, the other thing that you can do, this is an advanced strategy, is that you can do and I don't teach this method because I don't like to trade this way, but some people do. Wait for a break of this level and then trade it. Do a alert, and then fire a signal, and then enter the trade there, and then you put your stop losses down below. The challenge is you can't do, I wish you could do a close above. I don't think you can do, actually, you know what? Let me write that down. Sorry. I don't want just to close above. What I want is close above, then this, or if then. That's what I want. So I need to talk to a developer and see if we can do that. See if we can build that in. An if then. Just thought about something that I would like. An alert status. So let me just, before we move on to, that's entries. So is it clear that you choose a higher time frame? You should be looking at the daily as well. A higher time frame, and then you identify your two trades, and then you enter the two highest probable trades. Is that clear? Or does that make sense? And then what you're doing, you're using the 1 hour to correlate whether or not that makes sense based on the Rexstock system, if there's another level. I like the 30-minute too for swing trades. I really do. Because the 30-minute, like I shared before, or like I share in the training, is structure. And what I mean by structure, it's blocky. And so the other thing that I would suggest you do is you journal this, which you should be doing anyways. And what would we journal in this trade? We would say, okay, I'm doing a fade trade. I see a flag pattern potentially developing on the 4 hour. If we go back to the 1 hour, just not to confuse it, I'm not going to just inject there's a weak flag pattern potentially developing over the 60-minute time frame. But what does the chart tell you, though? That's the one thing, as far as volatility-wise. Volatility-wise, and this is where, when you're doing swing trades, they're set and forget. I'm just going to give you a piece of advice here. You set your 2 times a day, and you don't look at them. You do not watch them. One of my biggest challenges with streaming. So, for instance, on Friday, I'll give you an example just to share this. I got off the stream, and about a half hour later, I looked at the chart on the NQ, and I'm like, it's going to rip up. And I entered for 12 lots. Now, on the stream, I was trading 1 to 3 lots. I wasn't trading. But off stream, I'm like, okay, I'm trading my aggressive style. I enter long 12 lots. And then I put my stop losses in. And I went and started writing my novel. So I'm working on finally finishing my first novel. And then I went back to the charts and I was up like 2.5 grand, 3 grand. I'm like, that's the problem with me streaming, is that I'm so focused on the charts. I'm getting tunnel vision, and I don't trade that way ordinarily. Ordinarily, of course, I have the chart up on a screen that I can see. So it's not like I'm not watching it, but it's not garnering my attention. With swing trades, it will drive you insane if you watch the actual charts. So it's set and forget. And eventually what you asked originally was, okay, how do I do set and forget? So, I'm just doing this. So this is, you set and forget it. You don't go in there, 5 times a day and see how my trade's doing. You don't care. You set and forget. The other thing you could do, the only other thing I would suggest you do, so don't care about price going against you. Meaning that, and we're going to get into stop losses and we're going to get into take profits. Here's what I would suggest. Your attention, time is the most valuable asset that we have. Of course, obviously when you get a disease like cancer or something, you're dealing with it for years, then that becomes more apparent. Most of you that aren't dealing with a disease, right? Like you're just, going through life and just like assuming you have just unlimited time, but we all have an end date. Well, so far, we don't know if we figured out how to survive forever, but, so you need to, the chart, here's another way to look at it, is that a chart is another employee in your trade company. And a chart doesn't deserve your constant attention. A chart should only garner your attention when it's necessary. So this comes back to discipline. If you're, like you said, I'm too focused on the charts and I closely watch price go against you, that's discipline. You need to stop that. And, however you stop it, whatever process you come to stopping that, you need to stop it. And then you need to design there's 2 ways to do this. Either you say, okay, on every 4 hours, I'm going to check my trades and I'm going to make a trade decision. And it's not waffling. It's not, I'm down, whatever. It's like, do I get out of this trade? Do I add to this trade? So what you might do is you might be down. You might say, hey, you know what? Let's say you're into this trade, and let's say that it's the thesis for the trade. What is the thesis for our trade here? We see a flag pattern develop, and we feel that there's a higher probability that it's going to break through the momentum indicators. We're doing a fade trade, and it's going to test the weekly open before the end of day tomorrow. That's our thesis for this trade. Simple. We don't need to get difficult. It's either going to happen or not. Now, does the chart support that? Sort of, but we are fade trading. So, but it's the weekend and low liquidity. So all it takes is the 4 hour to close up here. And then our thesis is still on, because then the signal was sent to the market that, hey, this level has been captured. Momentum shifted. It's recaptured momentum. Now it has permission to take out the weekly open or try. So simplicity. The other thing that you can do is put additional alerts, non-alerts that don't fire signals, meaning that get used to not looking at the chart constantly in your positions constantly. You need to develop the discipline to either, if you can't, to either fire up the charts every 4 or 6 hours, whatever you want to check, or put alerts, and that's the only time you pay attention. Otherwise, you don't care. Otherwise, do other things. Hang out with your family, hang out with your kids, hang out, do other things. Like, I was playing Far Cry 6 earlier. And then, so it's literally just this antidote. Just trust me on this. If you develop this process, you will be a much better trader. So like you said, you're too focused on charts. You're watching the price go against you. This is where, with swing trades especially, there's only 2 ways to do it. There's only one way to do it. You enter the trade, you put your stops, and you forget about it. And then you manage the trade when either alerts pop up or at set times that you set to check the trade. Now, let's talk about time, and then we're going to move on to stop losses because I know you have questions about stop losses. And then profit. I mean, profit targets, this is the thing. You're already in the training. So like you're already a member, you're already adopting the RecStock system. So you already know the profit targets. You already know where to put those. And if you don't, I can share in the den, but you should. So it should be very clear for you if we're in a fade long here, where your profit target would be. It should be very clear where maybe your alerts should be. So let me go down that path. So let me just solve the specific problem that you said, like, okay, I'm watching the charts, the price go against me, and it's frustrating me. Where would I put alerts? Well, number one, this level right here is an alert. This level here is an alert. And then down here, obviously this would get picked up here, but then you could just use this low as an alert. And then you could put this level here as an alert. So those are your alerts. So if you're talking about managing this trade as far as your expectations, that's the only time you care. You don't care any other time. Because other than that, it's just vacillating between deciding what the hell it wants to do. Does that make sense? I just want to check in with you before I move on to stop losses. We cover stop losses. So I'm just waiting for the chat, or just to send over in a chat. Okay. So that takes discipline. But you'll be a much better trader, and your sanity will be much better, and your psychology will be much better. You know, one of the things I'm going to start doing going forward is I'm going to make sure that when I mention things or when I do things, I want to make sure, because I have a mindset and psychology book, and it's like 400 pages. And I'm like, this is like, it's just like every other mindset and psychology book out there. It's full of a bunch of just advice that maybe works for people or not. The problem is 400 pages of advice, you don't know which one to use. So what I'm doing is, with my training and everything I'm putting out, I'm really focusing on, okay, how do I make sure that everything I talk about contains a component of psychology and mindset? Because that actually is such a critical component of trading. But if I don't intentionally say, okay, we're talking about trade entries. And so, for instance, what I just discussed actually is a good example. The last 20 minutes of my discussion is actually a mindset hack around how to be a better trader. And I can't force you to be disciplined on yourself to not watch your position and not want to check it. But what I can tell you is that that's the right answer. That's the right answer. Because your attention, and I'll end this, then we'll talk about setting stop losses. Your attention is the most valuable resource. And every day you get up and you have a certain amount of attention within your bucket. And the more attention that you give a chart, the more that it takes from your bucket. So if you're watching a chart consistently over, 1 or 2 hours in a trade, that it's the middle of Saturday, it's April 1st, it's like, what's the probability that it's going to rip and take out that upper level in the next 4 hours? Well, right now the chart's telling us it's not highly probable. It might, but the chart doesn't deserve your attention. And you're allowing something else to actually drain your most valuable resource. So the way to combat that is the two ways I said. I'm just going to restate it. On the chart, you see where you should have your alerts. That's the only time you pay attention. That's the only time. It's kind of like an alarm system. Like, if you're constantly worried that someone's breaking into your house, that's probably not sane. But when do you want to pay attention? When your alarm goes off. That's when you want to grab your firearm, your shotgun, your AR-15, and your pistol. And that's when you want to actually get ready. Is when you hear that beeping of your alarm, or you get some pre-alarm notifications. That's when you want to grab so otherwise, you should be a little paranoid, right? Not paranoid, but you should be aware. But you shouldn't be constantly, when you're watching a movie, worried about that, someone's sneaking around your domicile until you get an alert. It's the same kind of thing. All right, so let's talk about stop losses. What I would suggest is that, number one, we can use an ATR, so we're going to look at that. And then I'm on the final stages of 3 indicators, 2 indicators for sure. Here's the problem with stop losses, is they're situational. Right? They're situational to the chart. They're based on the story of the chart. So it's been very hard for me to develop a RexDog trading system stop loss indicator because it's about the story of the chart. It's about the recent volatility. It's about this alpha candle. It's about what pattern you're maybe trading. It's about a lot of different things. So, like, why would I have over 100 indicators that I've not on stop losses. I have about 7 indicators and stop losses that I've just abandoned because I'm not going to put out a garbage indicator that doesn't work in the trade system that we trade. But I'm close to, I think, figuring out a 80% stop loss indicator that will help. So how do you figure out your stop losses? Well, we can use an ATR, average true range. And you can see I have a couple stop loss calculator there. Let's throw that one on there, see what it looks like. Let's see what this one does too. And then let's see what the actual average true range does. All right. Isn't that exciting? So using the average true range, I put on a couple RexDog indicators on there. So what I want you to look at, why am I doing this? Let me just not confuse. So we have the RexDog average true range. And if I don't have this indicator, remind me in the den, and then I'll release this so that you can add it to your charts if you want to use it. So what do you use for the average true? What do you use for your stop loss? Well, it depends on how aggressive you want to be. What I would suggest is that you don't use the current number. You don't use the current number. The current number is not valid. The current number is not going to keep you in the trade. You want to look at your spikes. So the recent spike here is $4, $5.02. That's the recent spike. And what you want to look for with the ATR, like this is why I created the RexDog one, because look at how obvious the spike is. Meaning that with the ATR, the spikes aren't as obvious, but the RexDog one, the spike is right here, 6.9. The next spike is 5.5. The next spike is 5.2. And then, but what you want to see is, okay, I want to try to explain this in a way where we don't go down a rabbit hole. Or is it okay if I go down a rabbit hole? Let me check in with you. Is it okay if I go down a rabbit hole? We'll get to the end of how to choose a stop loss, but I can go down a rabbit hole of explaining how to think about this. I'm really just talking to you because I know there's only a few people watching. So, but I think this will be a good video for kind of put in the member section. So, do you want me to go down a rabbit hole of explaining the ATR in detail? Or do you just want me to just talk about stop losses? Just leave a comment. I'm going to take a drink real quick. Not whiskey, just straight up juice. Yeah. So I'm just waiting for feedback. True that. Okay. I got permission to go down the rabbit hole. All right. So let's talk about the rabbit hole of ATR. When you're thinking about ATR, and you're using ATR, see here's what I learned about my years of trading and me developing a trade system that's highly effective. The way that people teach to use indicators, you should listen to. But then you should do the exact opposite. And then usually the best way to use these indicators is somewhere, if you look at a scale, it's more on the exact opposite side than it is on how most of the gurus and the YouTubers and whatever else, even the original designers of these tools, like what you'll notice, and this is something that they use these tools, but because of, well, it's like history, right? History is rewritten. History, there's what really happened, and then basically as time goes on, things gets embellished. That's what happens with indicators, meaning that the original creator of it had an original purpose for it, and they used it in an original way. But then what happens is that other market participants got a hold of it, and then they created a paradigm of how to use it that was completely not completely, that was probably 50% against what the original creator and how they used it. Even though you might have a book. That's one thing I discovered. So with ATR, most people look at the ATR and say, okay, let me use the last $3.01 is where my ATR should be. What you need to look at with an ATR is look at the story of the chart and look at what caused the ATR to spike at that story of the chart. And are you in a similar area where you should use the current ATR setting? Or are you in an area where there is a similar type of ATR that you should use? Because look at it this way, okay? Now you're focused on, number one, I already told you how to solve not looking at the chart, okay? Let me put a scenario in front of you. Let's say we enter the trade right here, and we go long here. And let's say over the next, let's say you don't look at the chart at all, all right? Meaning that, let's say that you go to I don't know where you're at. Let's say that you take your significant other and you say, we're going to go to one of those bed and breakfasts, and I'm going to enter a trade, and I'm not going to check the trade for the next 18 hours, right? Let's just say you do that, okay? Let's say for the next 18 hours, what happens is that it sells off and it goes down here and it plays around down in this little range here, and it kind of like just does this and it just does this, but you've never looked at the chart. You don't have a clue. And it went down here and it almost got close to your stop loss, and then it hit right here because it goes below a low, and then it hits that low, and then the super whales, right? The super whales then enter Binance, and then like there's 2 4-hour candles that rip up and take out this level. Okay. Now let's say that you don't have any alerts, so you didn't do the alert thing because you're at this, this bread and breakfast and you're having a good time, and your significant other will be saying, why are you looking at your phone all the time, right? But then let's say that your significant other allows you to look at the chart at this point in time, and then this is when you look at the chart, is when you're up 1.2%. Emotionally, how do you feel? Now, you would have thought, wow, I got really close to my stop. That would have sucked. But let's say we're down here. But emotionally, you're in profit. And emotionally, it's much easier to manage a trade when you're in profit than, well, for most traders, what I want every single one of traders in my system to be able to do. And I think I'm going to start treating my Discord server like a prop firm. I might start a prop firm as well. But I think I might start treating it like a prop firm, meaning like I'm not going to accept certain things, like if there's a prop firm. And part of it's my fault for allowing, for me showing a bad example. So for instance, and I'm just going to go down a minor rabbit hole. If I show bad trading, but then I'm still profitable, is that the right thing to do? No. Like in my streams, if I show bad trading, but I'm still profitable, that's the wrong example to set. So me as a number one, I got positive P&L, so I'm happy. But number two, from a person that has training and that has a system and is having other people adopt the system, that is not allowable. I should not be doing that from a trainer perspective. Even though I'm profitable and I can manage the trade and I can trade myself out of it, I don't accept that in my trading anymore. So obviously it's easier to manage a trade. So if you check this, you're like, okay, great. I put my stop. I'll move my stop up. I'll move my stop up to entry. You know, I'm profitable. It's easier to manage that trade. You feel good. You're like, wow, I'm a genius. But you didn't see all this action. You weren't emotionally part of that. So that's what you need to develop. You need to develop that process. And what I'm sharing and why I went down that rabbit hole is because your stop most likely needs to be at one of these spikes. It's not the current ATR. The current ATR is, number one, let's put it in context of the story of the chart. Well, this is a 21. So it's the last 21 bars. The last 21 bars since Friday, since the close, or since before that, obviously. And we can see in the chart, the volatility has slowed down. Now let's talk about something else here. Let's talk about something else that's really important. At this point in the chart, right here, where we see a spike in volatility, right here, what else happened there? From a Rexdog trading system, I just want to give context to how to think about the ATR. And let me do a check real quick. And are you tracking me? Am I going down too much of a rabbit hole? Like, are you tracking me like as far? So I'm just going to wait and take another drink. And I know there's a delay, so it takes a little bit of time for someone to add text. So that's why there's a little bit, but that's good because I can take a. I just want to make sure I didn't leave, or you're tracking down the process that I'm going down. So I'll just assume you are. Makes sense. And maybe this is just jumping ahead, but how do you set the ATR spikes as an alert to our stop loss automatically? I don't know. You know, that's something that let's work together on that. So let's as you go through this process, let's are you in Delta? I don't think you're in Delta. You're trading Live Capital, right? If you're not, then ask to join Delta, and then otherwise just let's work together in the den to figure out how to do this, because I don't know how you do that. But let's figure out how to do that, because I think it's an important aspect. So now let's move on. Let me cover what is different from a Rexdog trading perspective, the system here, comparatively where we're at here. So let's talk through that, and let's talk about why you should be not using the current ATR, because you should be projecting what would cause this type of behavior. What I mean by that is, what do we have here? We have an alpha candle that took out the weekly open. But what actually happened down here? Down here, what do we see? We see momentum and bias holding. Sorry, just momentum. Momentum switched over on the 4-hour. It recaptured pretty much on the close. On the close. So we're actually seeing, if you look at this, if I use that term, what do we see here? This is kind of interesting, actually. It's not the same pattern because it's taken a little bit longer to develop. But what do we see here? We're almost in a similar type of behavior right here, where we are in a fade trade, and then it went back and recaptured the weekly open on 2 successful 4-hour candles. That's the trade we're trying to execute right now. That's the trade that we see. So obviously the pattern's a little bit different and here, but what happened there? That spike created a spike in ATR. So if you look at recency as far as the chart, recency as far as volatility around when momentum moved, when momentum shifted. So this is the thing that you need to understand about momentum, is that when momentum officially decides to go into action, it goes into action. So what I mean by is, look, we came from a momentum short environment, a bias short environment, and then here the market got permission to go momentum long. And then it did a check, and then it ripped up. And then it did another check here, and then it ripped up. Well, what did volatility and ATR do around that time? Well, because it's in a switchover state and it's deciding that, okay, we're in a momentum shift, we're gonna go to the next level we want to go to. Well, ATR increased. ATR increased because the range of the bars increased because volatility increased. But did the system hold up? Did momentum and bias hold up through this whole move? It did. So that's why when you're looking at setting your stop losses, you don't want to use the recent stop loss, because that's not projecting the volatility of the trade that you're executing. Think about it this way. This is a prime example. Back here, in order for this trade to be executed, the volatility that it was at right in this range here had to be increased for it to take that out by Sunday, by the close on Sunday. It had to. So your ATR calculations back here before these candles hit were invalid, because you would have got knocked out of the trade because you wouldn't have been projecting ATR and volatility correctly. So when you're using ATR, the biggest mistake that people make is that what they do is they use the current ATR and they think that that's valid. It's not valid. That's just the current. You need to project your ATR according to the projected move, the trade that you're in. And the best way to do that is find a similar area of the chart where the projected move matches what you're doing, and then look at the ATR there and take the spike. So your ATR really should be anywhere between $8 and $9.01, or your stop loss. So now, does the trade support that? That's the question. So here's our stop at $10, and then here's our profit at $13. Right? Am I doing that right? I know I'm sometimes stupid. Yeah, that's right. P&L, 10.3, and then target 13.5. So if we enter this trade right now, based on projected ATR, not current ATR, like I said, current ATR, where would you be? Current ATR, right now, it's at $3.06. Well, if it does this type of behavior, we're going to get knocked out. Now, like I said, this comes down to how would I want to trade this? Like, let's say that I was trading this live. Well, number one, I'd enter now, okay? And then I'd plan a scale-in plan all the way down to here, down to the RDA extreme band. That's how I'd want to. That's how I'd trade it. So, if you want to know how I aggressively would trade this based on a swing trade, based on how I'd like to trade this, I would create a scale-in plan from here down to here, and then my stop loss would probably be right here. That would be my stop loss. So I would create a scale-in plan all the way down to here, and then my stop loss would be right here. If I wanted to do a set and forget trade, that's what I would do. So that's how I would be trading this current situation with the same scenario that we said, which is like set and forget. I'm not looking at the charts. What I would probably do, this is how I like to operate, is that I would pay attention to the chart if I got picked up on these entries. This is my aggressive style of trading it. And I probably wouldn't even have a stop loss there just because this is BNB. I would put a protective stop loss. I probably wouldn't even put a protective stop loss, just so you know. So I wouldn't have a stop loss in this trade just because I'm fine owning BNB. And then if I was, this isn't the best way to trade, so I don't want to, I shouldn't mention this. But there are certain crypto alts that I'll do a swing trade on like this. I won't put a stop loss in because I'll just stack it. And if it works out as a swing trade, great. Otherwise, I'll just stack it, meaning that I'll just, you know, I've had BNB since all the way from $5. So, you know, I've been buying BNB since it's been out. So, and I think it's still going to, you know, we're going to have another crypto run. If we look at the 4-day chart, it's going to go and take out the all-time highs. So I just share that just for full disclosure, just because I share full disclosure. So that's where you put your stop loss. There's no other way to do it. You take one of the spikes and then you use the spikes. You don't use the current ATR. Does that answer the stop loss question? It's simple. Using the ATR. Then you're using market data, but you're not using recent market data. You're using, you're finding an area in the chart, and it could be you could go back farther, right? If you're gonna use the 4-hour, you could go back farther, and say, okay, look at the chart and find similar areas of patterns, and then look at the ATR there, and then that's your stop loss. And what are you going to do? Are you going to argue with that? Don't try to reason yourself out of a smaller stop loss. If the trade doesn't support that, then put the trade entry where it does support that. So, for instance, let's say that we go back in the chart and we say, well, you know, we really need a stop loss around $7.04. And we go to our current chart here and we say, okay, well, if we enter here $7.04, I don't want to lose that much money. Well, it's real simple. Where does the trade support that? And that's where you put your entry. And that's where you either wait and it either unfolds or not. You know, this is where, once again, this is why trading's messy, because what is the trade that we should be executing? Well, we should be executing probably a short trade down to this level. So if we just remove everything from here, if we were to say, what trade should we execute? Well, based on the chart, and this is the problem with trading, is that obviously, you know, it's probably in a changeover state, but what should we really execute? Well, we probably should really execute a short position, maybe right here, because it did fail, but right here, and then our take profit is right here. Our take profit is right here. That's our take profit. Where's our stop? You know, our stop is right there. Maybe a little bit higher. So, you know, that's kind of the, if you have two brokers, you could do this trade. You could do both trades, meaning that, well, some futures market you can do, but basically that's the trade that the system tells us we should do, right? If we look at this, well, it's momentum and bias short. Yeah, we see a flag pattern, but aren't we arguing with the chart? And I know I just went down the whole path of, oh, let's do a long. Well, yeah, but we're arguing the chart. Right now, if I were to look at this chart and say, okay, let me follow the system, let me trade the system, let me not argue with the system. What's the trade that's on the table? That's the trade on the table. As far as a swing trade. Maybe enter now for a rejection, and then I would put an alert right here. Why? Because there's the mix 200. And then I would put an alert just above this high if I wanted to manage this trade. And then that's the way I would execute this. So, you know, it doesn't get more difficult than that. I guess I'd like to check in now. Do you have a clear plan to execute? Now, obviously, we didn't get into the technology, but the technology side is the way it works is that you set alerts, and then a tool like 3Com can take your text alerts, and then it will enter the trade according to that. And there's a certain way that you do that. Well, let me just go to 3Com real quick. 3Com trading. Oh, it's called 3 commas. There it is. I'll share this link in So like here's how to create a DCA bot using TradingView custom signal deal start condition. So this walks you through how to do it. So it's all here. And I've set this up, I've done this before. So I don't think I have, and maybe what I can do, or maybe what I'd like to do is maybe walk through doing some of this stuff, you know, with you to reset it up. So that's how to, that's using 3Comp. And then this walks you through completely how to do it, how to set the alert once per bar, and then kind of like how to do it. So it's pretty, and it's actually they use a webhook URL here. So yeah, I've done this before. It's does take a little process, but you know, like I said at the beginning, what I would suggest, you know, before you do that and go down that path, what you don't know yet, yeah, so Bybit. So you have one for Bybit. So, okay, great. What you don't know yet, or maybe you do, is that you should be writing. So remember, we have a business, right? So with a business, you're typically documenting things. Yeah, no, nice to see you too. So Ann Tillum. So I'm doing good. You know, I feel good. You know, my treatment this week, and I'm just starting to get over it. So, meaning that I never know how it's going to affect me cycle-wise. I've just had to rest a little bit more. So, if you have this trade plan, meaning, here's the thing. If you have written down twice a day, I log in and I make trade decisions and I put alerts, and then here's how I make the decision. It shouldn't take you longer than 1 minute to plan out 2 trades. So with the Rexdog system and this swing trading, you should be able to fire up a chart and identify your upside short trade and your downside long trade. And you should know your stop loss and your targets within 1 minute. It's maybe the only thing it might take a little bit is that you don't find an exact area for your stop loss, and you need to do it a little bit more analysis. But it's technically, or it's not. It's usually it's the recent. Usually, it's either the most recent one or it's the spike right behind it. It's really about the story of the chart at that point in time, where you know, obviously if you're in an inside bar on a day. So for instance, if we look at the day, and this is just one other thing I just mentioned. Well, if we look at the daily chart on this thing, and we're kind of in this weird area here where it can literally go, you know, either way. Because the chart kind of tells us that it's going to sell off ahead of doing the spike up based on momentum, because it's lost momentum. So from the daily perspective, we should be probably not trading the flag pattern we're trading. But what did we see? This is why, you know, trading is messy. Well, we have a flag pattern that not in a similar place. We'd want to look on the daily. So maybe I open up the daily chart just to kind of like open it up, just kind of see where we're at on the daily. I just want to see what it looks like on the daily. So obviously we have a similar area. We have 2 similar areas. One right here where the signal said we should be short. But the trade obviously was in a changeover state. It was at the end of an exhaustion move. And then we're at the bottom here of this daily range here. We're not in the same situation right now. Where would the same situation be? Well, the same situation on the daily would be right here around the RDA. That's the same situation for this same type of pattern. This was a bottom, created a level, and then from there it ripped up on the daily. We're not in a similar type of area, we're in the middle of, really, if you look at this value range that we're developing here on the daily, we're in the middle of a value range. So we don't really have a clear answer on the daily chart here. If we look at this, we just do a value analysis just based on levels. We're in the middle of it right there. We're at the 50% mark of the value range. So, well, what do we know about that? Well, we expect maybe the 50% level to hold up. So, and then you got lows here, but we've lost momentum, both long and short. We're still above the RDA, so we're kind of more, what does that mean? Well, on a pullback, we'd be looking for the RDA to hold up. So from a perspective of this chart, our edge in this trade, we should be short, just to be clear. But doesn't mean that that pattern that we saw previously won't work out. So obviously that's the challenge, or that's, you have to make a decision. You have to use conviction. You have to be trading from conviction. Now, what I started this with is you should just have one ticker. Now, if you have a written down process and it takes you less than 1 minute, I'll give you 2 minutes, okay? Meaning that you look at the daily chart, you look at the 4 hour and the 1 hour, and then you plan your 2 trades. And then you know your stop loss and you know your take profits. And then you know where to put your alerts. So let's just go over, let me just create a list. So I'll copy this and put it down here just so I retain this, so I don't lose it, because I might want to take notes on this. And then, so we're going to call it the 2 minute swing trade system. All right. You have scheduled time. Right now, you're not automating this yet because you haven't proved that the model works. So you're not automating anything yet. You can start to try, but I would suggest that you want to actually see how it works in real time, forward testing, and then slowly move towards the automation. So scheduled time to check charts. And then time limit on TA. So you have a scheduled time that you check charts twice a day or 3 times a day. It's something that doesn't emotionally make you go crazy. So twice a day is the minimum, and then 4 times a day is the max. 4 times max. Time limit on TA, meaning it should be per chart, it should be 1 to 3 minutes. If you're spending more than 1 to 3 minutes on a chart using the RecStock system, you're doing it wrong. It depends on where you're at in your learning of the RecStock system. So if you're new, okay, I allow you a little bit more time. But if you've been in the training, you've gone through the full training, you've been trading it for 1 or 2 months, your time of analyzing a chart should go down drastically, because you should immediately see the highest probability 2 trades on a chart. And then, so TA, so the first thing you're going to identify is, do you enter a trade now? Enter a trade now. And then you should define 2 high probability trades. That is, you have the short. Let me do long first. Long and short. Now, in that, you're going to identify first risk. So where's your stop loss? And you're using ATR. And with the ATR, what you're going to do is you're going to look for similar spikes. Did I spell that right? And not use the current ATR unless it matches the story of the chart of a similar move. Because, look, I did a video on this. All the information you need to be a successful trader exists in the chart. So you either trust the chart or don't. So this is real chart information. And if in the last 2 weeks, the largest ATR move that you've seen has been $5, for instance. That's the largest ATR move. That's where your stop needs to be. Now, you can do derivatives of this, meaning that, once again, what do I always say? You take my trade system and you make it your own, okay? So the best advice I can give to people that are adopting my system is take what I say, trust but verify, and then make it your own. Meaning that, okay, you might say, oh, I'm just not comfortable with $5, but I'll use that information and I'll cut it in half, and that's what I'll do. Great. Make sure this is all written down, and make sure you have a process, and make sure it doesn't take you more than 1 to 3 minutes. Okay, so we know our risk. Now we do our profit potential, and that's using the RexDog system. Use the RexDog system. Simple. I mean, you're using strong levels, you're using maybe the daily, but you want to stick with the 4-hour ideally. You should be able to look at, not only can you define your 2 high probability trades, the 2 high probability trades define the amount of room that exists for that. Ideally, what you would do is you would trade in thirds. Trade in thirds, in 1/3. Meaning that what you do for profit is that you have 2 assigned take profit or position or orders. Could be limit, could be stop limit orders, and then you allow for 1/3 to be a runner, and then with 3-com, for instance, you can do a trailing stop loss. So you have your risk, you have your profit, and you have 2 trades that you put in the system. The other thing that you would do, if you want to, is that you put alerts at key areas that the chart justifies. Not you're watching the chart all the time. It's literally, okay, if price gets up here, I need to make a decision. That's what it is. Meaning that on this chart here, on the 4-hour, we've already identified it. On the 4-hour, if price gets above this level, we've already identified that we want to be made aware of it. Maybe we want to move up our stop. Maybe those are trade management decisions. Other than that, you're not looking at the chart ever. You don't care. I mean, you don't care, but I mean, you only care when the chart tells you that you should pay attention. Other than that, you have no decision to make. You've already made your decision. This is your process. You've already made your decision. You don't need it. There's no other decision you need to make. This is trading the 2-minute swing, the 2-minute swing trade system. I'm going to call this with high conviction. Okay? You're trading with conviction, meaning that this is your trade plan. And you follow your trade plan, you trade it with conviction, and the only time that the chart that you allow the chart to give you that you allow the chart to have your attention is when it deems it needs attention. Other than that, you're executing your plan accordingly. You don't need to worry about anything else. You've already designed your plan. And it took you 1 to 3 minutes. Didn't take you hours. Took you 1 to 3 minutes. And then it's set and forget. Move on, enjoy your life, and then track accordingly. Obviously, journal. The biggest thing you can do during this process too is journal and say, look, you want to track, is it a fade trade, a momentum trade? What were your decisions? Just as much as you can journal as possible will help you refine, and you'll start to see trends. You'll start to say, well, I got stopped out there, or really I need to be a little bit more patient, or I need to do this. You'll start to see trends. And then it's trade management. And then here's the thing with trade management. I'm going to put this separate. It's not, trade management starts before you enter the trade. But so what I would say is it's trade management, or it's in position trade management. Believe it or not, not believe it or not, trade management starts here. Trade management. That's where trade management starts. In position trade management, you just want a procedure. That's all you want. You need to get to, I say this, binary decisions. So binary decisions, meaning there should not be questions. It's literally, let's say we got an alert, and let's say up here we got an alert that price hit this level up here. What's my trade management decision if I entered down here? Let's say I entered right here. So let's move this here. Let's say I entered right here, and then this is my stop below the mix 200. And then I get an alert that the trade's up here. Well, there's only two questions I really need. Or here's how. Number one, you should have a process. Do I take profit? Do I move up my stop? That's all you really need to know. Do I add to the position as an advanced thing? But really, it's just, do I take profit? Do I move up my stop? At that point in time, that's where maybe I would allow you to maybe go down to the 5 minute and say, oh, okay, what does the 5 minute tell me? But once again, this is you developing the process. Now, why would I say you can go down to the 5 minute? Well, because you understand, you're trading the Rexdog system, and you might look at the 5 minute and say, well, the 5 minutes been momentum long for the last 2 hours. So if you look at this chart right here, you might say, okay, well, the 5 minute tells me that I should move up my stop to here. That's where I should move up my stop. Now, you might say, well, I should move up my stop in profit. Never move your stop to break even. Always pay for fees. And I would suggest you move your stop just more than just paying for fees to make a little bit. Now, let me just share the concept here. Well, if you were planning this trade, what would have happened in this level? Your first profit would have been taken, right? So if you're trading this system, right? Well, and we entered the trade right here, our first profit is right here. So you might get an alert. That might be your alert that your first profit was taken. And then at that point in time, and I don't know how sophisticated 3Com is or Bybit right now. Maybe you can say, okay, once it's 2% in profit, I can move my stop loss off a little bit and, above my entry. But from that point forward, where's your next take profit? Well, that's where you kind of decide. Is my next take profit at the high probability area here, or do I hold out for the next take profit for the true weekly open? That's where, if you were setting this trade in advance and you were to put your stop losses and you could take profits in thirds, what you would be doing is your overall stop loss would be where it needs to be. And then you'd have a take profit here and you'd have a take profit here. And then you'd allow for a runner. That's it. So your position trade management, here's what I would suggest. Have a stopwatch. I mean, if you have a phone, you have a stopwatch on it. And then time, how long it takes you to do these things. And literally create a checklist on this and just go down and just check it off as you go through it. If you want to develop the habit, you have to start. Number one, you need to figure out how you develop habits. People develop habits individually differently, a little bit different. So if for you, what you need to do is take this, and I'll share this in the den. I'll share all the notes here so you can copy and paste it if you want. But if you need to understand how you develop habits. And if for you to develop this habit of doing this so that you're not wasting your most valuable resource, which is time, meaning that you literally just create a Word document where you just have check marks. And then what you do is you print out 20 of those. And then you just go through and you say, okay, I'm pulling it up. All right, stop my stopwatch. All right, do I enter a trade now? No. Okay, now let me define my long and short trades. Okay, that's done. Okay, now on those trades, where's my risk at? Okay, that's my risk. All right, where's my profit potential? Okay. And then obviously there's a decision here. So I didn't put in here, I didn't decide. So right here is where you would decide to enter the trade. So it'd be decide or execute. It'd be execute, trade, or place entries, or place, what would be the term, trade data. Probably a better way to word that. But this shouldn't take you longer than 3 minutes using the RexDog system. And then the in-position trade management shouldn't take you longer than a minute, because you've already looked at the trade, and it is gonna, it's either at one place or another, and you already kind of decided if it's here, do I add to this position? Do I get out? You know, this, like, literally, it shouldn't take you to track 10 tickers. It shouldn't take you more than 20 minutes. But I just said start with one, just because I'd like to start people slow. All right, so that's, I don't know, this went, I was a little more organized than I thought I was going to be, meaning that I've had this all, obviously I've executed this myself, but any other questions or any other things I need to cover that's not clear? And once again, this is using the RexDog system. If you're new, join Discord down below. If you're just watching this or you're watching the recording, you see a link to join Discord below. And then that's what we're really trading. That's why I can say someone should be able to look at a chart within 1 minute and look at the indicators and clearly know the trades that are on the table. Did that clear up your question about, or does that give you a solution for, I know I deviated a little bit from technology-wise how to do it. Nope, it didn't clear it up, or it did clear it up? Or no more questions. So, because I know I didn't, the technology side or how to do the alert side, I'm kind of, yeah, no, good. So, let's stay in touch, obviously in the den, and because I'm also, I'd kind of be interested in documenting me doing this and creating an effective swing, because I know I have some swing trade stuff and I talk about it, but I haven't, there's nothing as this clear that is in the training, and that's on my list. On my list is to refine the swing trading, so it's a more like a checklist. It's very clear. Yeah. So yeah, let's stay in touch. Anybody else have any questions that's on? Otherwise, I'm gonna probably go back and get some dinner and maybe play Far Cry a little bit more, possibly, and take a break. I am working on, so just so I'm working on, these are the content I'm working on. So working on some content, the future content for the next 2 months or so. So that's the content. These are the videos and the various training content I'm working on. I'll share that in Discord as well. Yeah, no. But this is, I'm going to take this video and put it in as far as the swing trading section, just for the start, because this is kind of the full high level picture. It's not as focused as I obviously want it, but I think this provides anybody trading the RexDog system the starting component of, this could work in everything. I mean, this isn't just crypto. You can do this in equities. I do a similar type of thing in equities. Just so for instance, I shared, my coin, or the coin trade I'm in, NVIDIA. I followed this exact plan. So the NVIDIA idea that I have, or that I'm trading, how long does it take to learn the system, and how long do I learn to deal with your emotions? And I know it's way harder to trade when you're trading with more money. You should be able to pick up my system. Well, so for instance, CS the third, he shared something recently about, so my training starts where I explain to you the system, and then there's 3 hours of evidence. And the 3 hours of evidence, what it does is it goes through different markets, different tickers. But when you go through that evidence, you already understand the system at a high level. And then the evidence is there to show you that it just works. It works time and time again. And I'm not cherry picking things. I'm just randomly going to things. I mean, I do go to specific markets like futures and Forex and everything else. But so getting the concept of the system is within the first 5 to 6 hours. So you understand the system, you understand the power of it, you understand the reactions. Now, as far as executing it trade-wise, that's different for every individual because it's all emotional. Because I can show you a system and I can show you, hey, this is awesome, it works time and time again, but you don't trust it because you didn't design it. Plus, I implore you to make it your own. So then you need to understand your personality. And I've tried to create training like, how do I make it so that I factor in people's personality? It's virtually impossible because I don't know what your risk tolerance is. I don't know, like you said, if you're trading with more money, it's actually easier to trade with more money. Believe it or not. It's harder to trade with less money because with more money, with proper risk management, you actually have more options and you have more ability to stick with a trade longer, to trade smaller size, and to use your capital effectively. If you only have $1,000, your margin for error is much smaller than someone with $10,000. And you might think, well, wouldn't I be trading with $10,000? Wouldn't I be trading bigger size? Yeah, but not really. You would be, but what I'm saying is that if you're just starting out and learning a system, you're not. Meaning that you have the ability to trade yourself out of trades in a $10,000 account where you don't really in a $1,000 account. Well, you do, but you just know how to trade it. The problem is on an emotional level, on a psychological level, most people that are trading with like $1,000, they feel like they're not making progress because they're just making $15 here, $5 here, $30 or $40 here. And for most people, that's not attaining their dream. And they don't have the patience to spend a good month developing the system. And then, but if you have larger capital, like your wins are, a decent amount typically. You can lose a lot more, but then it feels like it feels like the capital is more substantial is what I've noticed. Yeah. So when you swing trade, I trade with less money. It feels like I don't care. But when I trade with more money, my emotions start taking over. Yeah. That's just because you're not trading a system. Doesn't matter. I mean, really, that's why when you see me trade on KuCoin and like I'm celebrating like a $15 win, I'm only trading with $1,000, but I treat it like it's 100,000. I treat it like it's 500,000, because to me, all I care about is am I executing a trade effectively, and I'm looking at percentages. I don't care about the dollar number, because that's fake. That's not real. What's real is the percentage. What's real is I just made 10% on that trade. And then it doesn't matter if I'm trading 1 million, 100 million, 10,000. The percentage number is the same. So, what you have to do, you have to develop this process as a trader that you don't care about the physical number. You care about executing good trades. And you have to train your mind to not think about the capital level you're at. Because here's the thing. When are you going to do it? Meaning, what I mean is that, okay, you want to be a successful trader. And you want to, let's say you start with $10,000. Let's say you start with $1,000. And you want to be a successful trader. And you want to be trading with $100,000. So when should you develop good trade management strategies? When you hit 100,000? Or should you probably maybe think about developing it now? Because if you wait to get to $100,000 and then start developing good trade strategies, number one, you're not going to get to 100,000. But number two, you're playing catch up. So you need to look at this as this is your life. This is your calling. This is, you've decided to make trading a change in your life from a capital perspective, meaning that I'm going to use trading as a way that I'm going to attain capital in the world. So you should approach it from the perspective as if you were learning the guitar, meaning that you need to learn the basics and then you need to just build upon it. You know, you can't assume that you're going to be able to just do a solo from day one. You're going to have to build up to being able to do a solo with a guitar. Well, with people with trading, what they do is they think that, oh, I'll figure that stuff out when I'm trading with $10,000 and I'll trade this way. No, you should trade. The reason why you have emotional challenges with more money is because you haven't developed your mind properly to be a trader. And the dollar figure doesn't matter. You need to be able to develop yourself as a trader at $100 or $1,000 or $10,000 or $100,000. Because here's the thing that you're going to learn as you become a more profitable trader. You have to consistently go back and recalibrate your perspective and your mindset. And if you're not adept at doing it at $100 or $1,000, you're not going to be able to do it at $100,000 because the scale and what's on the line is even bigger. When you get to a couple million, it's a different mindset altogether. You got different issues you got to deal with. You got so, you know, with more success becomes more problems. They're typically good problems. The problem is with trading, because most people are just doing this by themselves, they're not told that you need to start developing your muscle memory in trading from day one. So, you know, you've identified that you have so for instance, in my system, you have if you were to join the training, you know, within a month, you should be proficient enough to be able to execute trades with conviction. You still might not know everything about the market, but you should be able to execute trades, momentum trades. And you should be successful in momentum trades because momentum trades are the easiest or the simplest trades to do. The problem what most people do is that they do fade trades. And then fade trades are the hardest to execute because they're fading the momentum of the market. If we want to use the word trend, I hate the word trend, you're going against the trend of the market when you're doing fade trades. So, you know, so for instance, my nephew I taught to trade. Obviously, I was with him, but two of my nephews, Tony, and then you haven't met the other one. So, what I've noticed is that because obviously I'm a voice, or they believe what I say. When they started trading, they just blindly traded the system on a momentum basis, and they did very well. And then what happened with Tony and what he's dealing with right now, my nephew, is that he got the fading bug, where he started enjoying fading, but then his trading suffered from it. And I was like, so for instance, he told me on Friday, he said, I hate days like Friday, because I'm like, dude, what do you mean you hate days like Friday? I'm like, you know, number one, I get it, because Friday on the NQ was straight up, it was an A+ day for the Rexdog system. If you traded the system, you should have doubled your account. Well, I didn't. I was fighting because I faded a couple times. I just wasn't blindly trading the system because I'm a dumb meathead, and I don't just blindly trade the system because I still need a challenge when I go out there and trade instead of focusing on pulling capital from the market. So I said, you know, you're falling into the same trap I do, which is like you like to fade because the challenge of it, and because the Rexdog system, when it's very clear the signals you should take, you feel stupid because you're like, it can't be this easy. It can't be this easy. It's like, okay, I'll buy again. I'll buy again. Okay, I'll buy again. Literally on Friday, your mantra should have been, okay, I'll go long again. Okay, it came back here. I'll go long again. I'll go long again. I'll go long again. Oh, maybe I won't go long here because something changed minor. Oh, now I'm going to go long again. Literally, if you look at the chart on Friday, if we just pull up the NQ and we just look at the chart, like there was, look at that. That is, it's so asinine. Like, it's just like, look at that NQ chart. A plus day for the Rexdog system. And there was no point in time, maybe 2 times you should have faded the market. Other than that, followed momentum all the way up. You got an entry here. You got an, like, look at your entries. Like if you're just a dumb meat bag, a meathead, like I should have been, entry there, entry there. And then when you include the 4 chart setup, this is just a time chart. When you include the 4 chart setup, like you have a superpower in trading because you have not only you entering at these key locations, you're entering on confirmation. Like it doesn't get more simpler, dumber than that. It's just like, and what did I do? I faded this move here. And I faded this move. Now I made money, but you know, the trade was momentum. So I share that because I'm going to start running Discord, I think, like a prop firm, meaning that I'm not going to allow I'm not going to start providing, what's the word? I should not be doing bad trading habits. I should not be projecting bad trading habits, even though I make money. I made, $7,000 or whatever on Friday. Great. But really, I was projecting a fade. I faded the market twice. And while one of those fades was an acceptable fade, the other one wasn't. I should have been momentum trading all day. I would have doubled my account if I was momentum trading. Not double. I mean, would have done much better. So, but that's what I told my nephew. I said, dude, a day like Friday, you should have doubled your account. Like, but because we're dumb meatheads, we're fighting the system. I said, I'm not allowing that anymore. I'm like, because I need it. And I know this sounds weird for a person that developed the system. And then this will kind of be the end. But, I'm at a level where when I stream, I need a challenge, or I feel I need a challenge. Instead of just focusing on, look, the whole point of trading is to pull capital from the market and put it in my bank account. That's the whole point of trading. It's not to have a challenge. It's not to feel a high. It's not to get endorphins and not to get all this stuff that when I enter a perfect fade trade and I time a top or bottom, that's not what it's about. It's about pulling capital from the market and putting it in my pocket. That's what it's about. So, I share that oftentimes. So for those that are, I know there's probably no one watching, but for the people that might be watching, what you're getting from Discord is not only you getting, am I there to support people that are members and join the training and that are looking to make trading kind of a change in their life and then adopting my system. You're also getting kind of a behind the curtain view of my trade log and me adjusting myself as a elite trader, because I'm open with the challenges I have. I'm open with the things I deal with, and I'm open with me developing more of an edge around my trading, and also being humble about the fact that I'm never going to understand the market, so I'm always trying to figure it out. So that's kind of for full context of what you get from a lot of times. Like I just did a lot of commenting today, and I got obviously no feedback. No one responded. No one did anything. Like, I don't feel bad about that because I use Discord and as a form of my trade journal. And I do that because I think it does provide value for other people that are looking to, I know there's a lot of lurkers. There's a lot of people that just, for whatever reason, don't comment or don't anything. I know that because every couple of days, someone will come up and ask a question, or someone will say, hey, I'm ready to start the training. And they've been in the server for maybe 2 to 3 weeks, or they've been in the server for a couple months. So I know there's a lot of people that are just kind of following along that never comment. That eventually they say, hey, this system makes sense. I've been following you for 2 months now, and you consistently show up. How do I get started with the training? So I that's why I continue to do it. It's not, you might look and say, well, no one's commenting, no one's interacting. Why are you just constantly sharing stuff? Because like I said, there's results of it of people coming back and saying, hey, even though there's not a lot of likes or anything else or conversations, I am seeing that people are consuming the content. And like I said, I have the RecStock trade system out there as a training, and to me, there has to be a daily ongoing focus of supporting people that are looking to adopt the system. That's my obligation. As a trainer, as a person that has put a system out there for others to adopt and make their own, my obligation is that I consistently focus on that. So I don't know how I went down this rabbit hole. Anyways, any other questions? I'll answer if there's any other questions. Otherwise, then I probably should call it a day, go have some dinner, chill, hang out with family and stuff like that. Thanks to everybody that did join or that did attend, and this recording will obviously be up. I'll share the recording later on. And if you are interested in getting started with the RecStock system, send me an email. You can visit the website down below, join Discord, send a DM, say, hey, how do I get started? I just like to talk to everybody before they get started just to make sure it's a fit. Yeah, and thanks everybody for Glock. Good to see you here. CS the third. And then Antelome. Yeah, thanks as well. Thank you. And then, in Discord, if you have more questions about this, this is not the final time we're going to cover swing trading. I will have a specific, I'm working on creating a specific swing trading section of the training that will be just as detailed as, obviously much of my training is focused on day trading, but swing trading is something I do as well, but I haven't, I know that there's still questions on how to fully, part of the problem is that the 4-chart setup is such a powerful thing. And with swing trading, only some markets we have access to tick charts. So it's you have to just use time charts and you have to do some other things. It's still highly effective. The other thing I'm going to do, I want to share this because this is something that I've used before and I'm going to get back into it. So Stock Fetcher I've used. I'm just going to show this and then we'll end the stream. I know I just keep saying I'm going to end the stream. So Stock Fetcher is a tool that I use for equities. And then what this tool does is it does a scan on the market. So I'll be sharing my actual Stock Fetcher things, and then we'll get more refined into this. What I like about Stock Fetcher is you can go back a week and you can say, okay, on this particular scan, like see the number here, negative 921, $5 or 3%. You can go back in time and you can say, okay, with this scan, and we enter trades, like how would this scan perform? So from a week ago, we would have been out of that trade. But this one's up 5%, this one's up 3%, this one here is up 13%, this one's up 9%, this one's down 11%, you would have been out of that trade. 13%. Just so you know that on this scan, for instance, in the equity market, your stop loss is set at 5%. Well, your stop loss is actually set here. So your stop loss, you'll see here on this scan, our stop loss is set. Oh, where's our stop loss? There it is. Standard deviation diff negative 147. That's our stop loss. And then you can use the ATR range too. But so typically your stop loss is 5%. So most of these winners are anywhere from 7 to 70%. And then the losers are at 5%. So you can see here, you can go back in time. You can even, what's kind of cool about this tool, so you can see here is 3%, 3%, 4%, 14%. Like you can even go back like a month and you can say, okay, if we held these positions using this scan, what would our be, negative 25%, 28%, negative 8%. There's some that are just, most of these obviously like with the 5%. most of these, if it's above 10%, the 5% stop loss didn't get hit. So that's something I want to kind of inject into the training. I just don't want to get unfocused. But this is something that I'll be working on here in the next week or so, to kind of bring into the training and bring into the membership, so that some people can start trading more effectively the Rexdog system with swing trades. That's the key. So I want, by the end of, maybe not this month, by the end of next month, I want just as an effective swing trading aspect of the training up there, as full as the current training is with the day trading. I feel like the day trading is well covered. Now I want to focus on the swing trading, and then we'll focus on swing trading. For me, is there's only two types of trades. There's day trading and swing trading, and then there's long term. The final thing I'll do is long term, and those are things like with gold, where I do my 10-year analysis, or I'll do a long term section about, okay, here's how I trade the Rexdog system in a multi-year basis, using things that pay dividends and stuff like that. But the next phase is refinement on the current system, and then swing trades, and then it's long term. So for those that are wondering, like, does this training ever get updated? Trading's my calling. So, I wouldn't be doing this at this level, but that's why I continue to update this. It's my passion. It's my calling. Plus, to me, it just adds more value to everybody that's adopting the system. All right. Well, thanks everybody for joining me. I look forward to seeing you, and we'll see. I'll probably be streaming on Monday. Everybody have a great rest of the weekend, and thanks for joining me.